Hi everyone, super happy to have you here for a webinar on climate dividends for investors only, or at least with a very high focus on investors. So we are 2 minutes late, but otherwise it's not fun, and it's not a French webinar. So today we're super happy to, we'll start right away. So we're super happy to have myself. So this is a super weird way to start. And I'm the CEO of Climate Dividends. We have also Erwann Ligné, who's partner at Eurazeo, and Damien, Didier, who's head of sustainability at Daphni. They will have a bit later on the opportunity to fully present themselves. So this is why I'm being extremely impolite to start with. We have an interesting and quite intense agenda. So this is why we're kicking it off right away. I first will present into a bit more depth climate dividends, so the indicator, the initiative, and where we're at, with a big focus on an investor use case. And then the objective is to have a feedback from Erwann and Damien, whose both funds are users from climate dividends. They'll first present a little bit their own experience with climate dividends, and then we'll have a sort of roundtable with several questions, and then we'll have a more in-depth Q&A for the whole presentation. Don't hesitate to put all your questions in the chat. There's a question or a chat box in the bottom of your link that you can go to. If some are easy, Thibaut from our team in Climate Dividends will answer them right away, and otherwise we'll take them at the end. So what are climate dividends? So sorry if some of you already know, we'll go a little bit from the start, but hopefully at the end it will be some interesting update for many of you. It all starts from an initial very simple analysis of the situation that I believe you all share, is that we need to decrease our global GHG emissions. And for that, we need, of course, more sufficiency from energy, services, and material, but we also need climate solutions that help all of us decarbonize the way we eat, the way we heat, the way we transport ourselves, etc. And for those climate solutions to exist, we need massive investment in them. And I mean, this is what the IPCC says, and a lot of people, it's not just me. But right now, we're very far from the mark in terms of investment into those climate solutions for many reasons. But one of them is the approach that we're currently taking when we analyze those climate solutions. And if we take a very simple, concrete example of a climate solution that could be thermal renovation. So for example, if we have a company whose role is to go and renovate the buildings of others, either by doing isolation or by changing their heating systems, putting them with heat pumps, those kind of things. That company, that the offer of that company, this thermal renovation, of course, emits GHG emissions to do so, because they need machines, they're going to transport it, they need material, etc. This is a negative impact that this company has. It, of course, must be reduced or optimized. That's not a question. But this activity also has a positive impact, what we call avoided or removed emission. In that case, it's avoided. Because every time they renovate a building, they sell a heat pump, they help the customers or the users of the buildings that they're renovating to decrease their own carbon footprint. So they might be increasing their carbon footprint, but they're helping their customers to do so. And so they're globally enabling us to decarbonize. So this is very important, and this climate positive contribution should be maximized. So the problem is that today, because we mostly assess and look at the induced emissions, just the negative impact of that solution, we're kind of ignoring, or at least not sufficiently valuing, the positive climate impact of those solutions, and we struggle to value them. And this is a problem not just with that specific solution, but more globally. There's a big struggle from climate solution to value their positive climate contribution, because the main focus is on the carbon footprint. And on the other side, the investor side, there's no actual incentive to support those climate solutions, because one of the main thing that an investor can today report and look at in a very standardized and easy way is the carbon footprint of its portfolio. So the same problem arises. And even above this, it's very difficult for an investor to know how to channel the money in the right direction, not just to do less bad, but to do good, or at least to have a positive climate impact. So there's a real critical need for a standardized and simple measure of those solutions' climate positive contribution to channel more investment towards them. And so that's why we created climate dividends. Climate dividends are extra financial information corresponding to that positive climate contribution, so measures in avoided or removed emission, that can then be awarded or claimed by equity shareholders. So for every ton of CO2 equivalent avoided or removed by a company, it will enable them to issue one climate dividend and distribute it to their shareholder. It works with a very simple 4-step process. The first thing is in the evaluation step. The first step is the eligibility assessment. Here I'm not going to go into too much depth, but just to tack on the point is there's one eligibility criteria at the level of the company, because the company must have assessed its negative carbon footprint and disclose it, or if it's a bigger company, it should have a 2050 transition plan that is validated by the science externally. Why? Because the idea is we're not going to talk about what's good if you're not even aware of what's bad. Same as in finance. You don't talk about revenues if you don't even know what it costs. Well, the two are the same. But what this means also is that you don't necessarily need to be a perfect climate tech, pure impact by design company. You can be also an SME or even a bigger company that as a whole isn't perfect, but has several climate solutions that are developing. So there's one eligibility criteria at the level of the company, and then it's the activity itself. The activity should be compatible with a 1.5 objective, should be really focused at decarbonizing and helping the customers, the users, to do less. And we also ask for sort of do no significant harm, because it's only climate, but we still have this in mind that, we're not in just a climate world. If you have one or several activities that are eligible, you can then measure them. And this is where it gets very important. The idea is that you're going to measure those avoided or removed emission, aligning and in compliance with the protocol that we at the Climate Dividend Association are developing. It's a standardized and generic rules, but quite precise. And then we have what we call a sectoral cookbooks. So it's how do we apply this on a sector, on a use case? What does it mean for a heat pump producer that I was mentioning? What does it mean for solar panel? What does it mean for circular economy in fashion, or those kind of things? And the idea is that we'll build little by little sectoral cookbooks that everyone will share. It doesn't mean it's perfect. Avoided emission will never be perfect, will never be the truth, but it means it will have the same level of rigor. It will be standardized and it will be transparent, so that everyone that uses those will be on the same basis. And that's a very key point. So the company will measure those avoided emissions thanks to those rules, and then formalize the claim, so the numbers of tons avoided or removed, in a document that they will then submit for external validation and verification. So here, an independent third party, not us, it's an external auditor that can be an auditor that the company already has, if they've got a Société à Mission in France, or a CSRD reporting, or any extra financial reporting that you may have. But we can also suggest one at the association, of course. They will come to do two things: the validation of the methodology, does it make sense and is it compliant to the protocol? And then the verification of the calculation, like any audit. That's for the first year, of course. Once you've been validated, you've got a validity period, and the following years, you just need to do the verification because you're still in the validity period of the methodology. Once this passed and it went well, because of course it can, the opinion that the verification party gives can be negative. The idea is that it is not, but it can. If everything goes well, this will then enable the company to issue those climate dividend in itself. And so convert those verified emissions into climate dividends, 1 ton, 1 climate dividend, as I said. All of this is issued on a public registry that you can look at on our website. So all the hypotheses, the documents underlying. So as I mentioned earlier, there's a big transparency exercise that's come here. And the last point is the distribution to the shareholders, to the investors. It's done in the pro rata of detention of capital, like you would do for financial dividend. What's important to notice here is that if you're a GP and you receive from my heat pump or thermal renovation company, I don't know, 4,000 climate dividends, you can then, of course, retransfer them to your LPs, exactly like you would do for financial dividends. The important thing is that there's only one final investor that will claim and say, I've received X amount of climate dividend. So either you stop it at the GP level and say, hey, I've received this, I'm super cool, or you just transfer it and say, I've enabled my LPs to generate that amount. So these are the 4 steps that all the companies go through. And so normally, if I made sense, you should see that it really looks like the mirror of a financial dividend for climate. Not in the sense that it's not money. Climate dividends are not an asset. It's not money. You can't sell them or whatever. But in the sense that they are proof of a value that you've created. If you look at the first line of my figure, that seems very simple and people are always a little bit annoyed at, oh, this is super simple, Laura. But normally it's helpful. Most company needs investment to start with. With that money, they will have a solution that they will sell to a customer. And if that solution, instead of just being any random thing, it's a climate solution, a thermal renovation service, a heat pump, a whatever, you make not only money, but you also have an impact, avoided or removed emission. But those 2 things, you can claim them at the level of the company. I made that much money, I had that impact. If you want to redirect them or retrace them back to your investors for financial revenues, you've got the financial dividends. For climate, you have nothing. So this is where the climate dividends come as a traceable proof. And just very quickly, without going into too much depth, but because I know that this is something that very often triggers people, this figure and this sort of scheme that I've just described works very well if instead of selling a solution, a company sells a carbon credit. Climate dividends are very complementary to carbon credits. It's not the same thing. The first big difference is that a climate dividend is here to measure a positive climate contribution, no matter whether you struggle financially to do it or not. We have a strong conviction of a company should be more attractive, more valued if it has a positive climate contribution, even if it's a very successful economically company. That's not the problem. Whereas a carbon credit is meant for companies that struggle financially because they have to prove their financial additionality. So the scope of companies, of project, of solution that can be addressed by climate dividends is much wider than those of carbon credits. And even in the case where it is, you can have both, it's not a problem because a carbon credit is just a financial, and I'm not saying it's bad, but it's a financial asset that you use in your sort of internal strategy. Instead of selling my service of thermal renovation, I sell a carbon credit because I sell it to someone who values it differently. But it doesn't change. At the level of the company, I can not report it back to my investors for the climate impact. And this is where the climate dividends comes. And the last thing is that, very importantly, climate dividends cannot be used in offsetting. You can't withdraw it from your carbon footprint, nor is the company emitting, nor is the investor receiving it. So even in the sort of weird case where as an investor, you would have to invest in equity and buy the carbon credit of the company, which would kind of be double the financial effort that you would need to support something. But let's say you want to do it. Well, even in that case, you wouldn't be able to withdraw it twice from your carbon footprint. So they wouldn't be cheating out of it. So that's very important. It's much more as a mirror of a financial dividend than anything with the carbon credits. So it has 2 main values. The first one, I hope you understood and you're not surprised by what I'm saying, is the standardization, and we'll come back on it. But our main first value is that we provide a standardized, reliable and transparent indicator of that positive climate contribution that comes in addition, and of course not instead, of the negative impact. But there's no reason for us to have like positive things, negative things and not positive. It's exactly like in the financial evaluation, you need both. And the second one is this traceable link between this impact and this equity investment logic. Because we use that word climate dividend, that aims to be a much more vulgarized concept, that you don't need to be a special expert of avoided emission to know that it is a positive signal. Because also it has a positive connotation, and because it mimics something that we all know as financial people, which is the financial dividends. Because all of this, it really makes it much easier, to integrate it into a financial rationale and financial processes. And the idea here is that really enables to go beyond a mere communication claim and go towards the integration into the financial valuation of the company. So these are the twofold. The first step, super important. We need to know what we're talking about if we want to measure, value, monitor a strategy, whether it's from a company side or an investor side. And the other one is that we want to make it something that counts financially. And this first point of standardization, we've been working a lot on it since the beginning of the association in January 2023. We've got this protocol, we've got an external technical committee. We'll submit it at a public consultation in Q4, but we already have a very strong basis right now that we're building upon, that will be improved all the time, but it's already been proven in several use cases that we have this standardization. This investment traceability and valuation is a little bit less advanced because it's a work in progress, and this is also why we need all of you in it. But we've been working quite a lot with many investors and also a financial working group with investors, experts, academics on how do we make this real. And I just want to share with you where we are and what we do on this on a very global level. Then Erwann and Damien will be able to touch base on some of those that were useful for them. But what we have here is Climate Dividend provide this unified and comparable metric that is really reliable and harmonized. That means that the idea is that once you've got this Climate Dividend, we know we have a measure of positive climate contribution that can be trusted and looked at. This is the first step to build then performance ratios on this, because one Climate Dividend in itself is, I mean, it's always a good signal, as a €1 financial dividend is always better than zero. But I mean, if I've given you €1 million and you give me back €1 in financial dividends, I'm probably going to be a little bit disappointed. Same thing for climate dividends. So this is where we need those performance ratios. There are some that are very carbon orientated. One where you will compare the climate dividend, so CD's climate dividend, to the carbon footprint, scope 1 to 3, of course. This can be done both from a company perspective, but also from a portfolio perspective. And this is useful first to avoid any greenwashing of, look, I have 2 climate dividends, but I have a sort of huge carbon footprint of 2 billion tons. Well, okay, guy, but this is not interesting. But this is also useful to have a look at, the efficiency of the use of one carbon ton that is spent. Okay, how much spending do I do to gain what exactly, like you do in financial perspective? And then you've got other ratios that we're looking at. We're setting up the climate dividend received per euros or dollars invested from an investor perspective. What's the climate performance of my investment? You can also have, from more the company perspective, but being assessed by investors, climate dividend issues compared to either EBITDA or revenues, depending on the stage of maturity of the company, but also climate dividends issued depending on the CapEx. On this, had a very interesting conversation with some VCs. They were saying, well, when we first initially invest, our companies, they're not making any revenues, and they're probably not going to make a lot of impact because they're not doing much. It's a bet. So looking at, okay, how much does it cost for how many climate impact, for how many climate dividend, and how is this improving, and at what rate? This can be an extremely interesting ratio to look at. Then we can also look at the total climate dividends issued over a holding period, etc. There's many others, and the list isn't fixed, but just to give you a very concrete example of how this is very similar to what we used to do for financial metrics, but we can do for climate. Once you've got those performance ratios, the idea is that it can be used in 3 main ways. The first one is for an investor, of course. Useful at all stages, from the due diligence to the exit, to really select, report, value, make decision, and even, of course, communicate. And on this, it's quite interesting. We have currently discussing with several investors that were looking at how can they integrate climate dividends in the due diligence or in the investment thesis. I know, for example, I don't know if someone from Ademe Investment is here, it's something that they looked at when they invested in Team for the Planet, for example. So we have a lot of ongoing discussions on this from the investor side. But on the other side, we also have an increasing numbers of companies that are using climate dividends in their deck to actually show and attract investors based on that. We had a testimonial from a company called La Virgule in France, who does sort of upcycling of sports gear and sportswear waste. They reported to us that climate dividends were a good way to accelerate their fundraising. This is not why they found investors. We're not there yet, hopefully some point, but it accelerated and made it easier to convince them because first it prevented the investors from doing another climate due diligence because they could trust this one. And also because they told them, well, guys, we're going to distribute climate dividends soon. So if you want to be in, it's now and not in 1 month and 2 months. And so that helped them in that way. We also have 15, for example, the company that does a lot of bicycles in many cities, which Daphni is an investor of, who told us that they were going to include it in their next round deck right now. And we also have companies like an SME called Aquarus, who integrated it in a criteria for their bank loan. So that was quite interesting as well. So this is what you can do throughout the whole process. The second part is that it really provides a simple and standardized metric for a GP to use in their fundraising towards LPs, and then the reporting, and they can set in the fund objectives themselves. So this is just starting, but we know we have several funds who integrated it either in the deck or in their impact reporting. I think Demeter did it last year. We talked with Serena to give other examples who mentioned it. And we also have a number of a lot of funds who want to tie their carried interest to climate metrics, but are willing to have a reliable and quite externally verified metric if their carried interest is going to be linked to that. And so we're discussing how climate dividends could be useful in objective and target into this. And the last point, which is for me the most interesting once we'll hook it, is the idea that climate dividends are going to help us to leverage impact for giving a valuation premium. So the idea is that it will help us quantify and value what we could call a climate goodwill. More and more people, more and more investors are telling me, and not just me, but are saying that theoretically they would be willing to pay more for a company that has a positive climate impact. But because they don't know how to quantify it, they don't know how to grasp it, and also because they don't want to be the only one who do so and then be penalized for it, well, no one is really doing so, or in a very anecdotic way. And so here the idea is that the ability of a company to generate climate dividend or to have good climate dividend ratios is one way of quantifying this, of informing that decision and making it much easier to put a value on this. And so this is one of the topics on which the financial working group that we're coordinating is working, but we're also discussing it with a lot of initiatives that are happening internationally at the moment, the International Foundation for Valuing Impact, the Impact Valuation Hub led by SVI and Astonor, for example, the Impact Economy Foundation. There's a lot of them with whom we're discussing, because a lot of them are saying, okay, we should put a value on impact, we should make a link, but they need inputs, and they need reliable and shared inputs. And this is where we have something to play and an interesting value. So this is very concrete. And just to finish up on a bigger level, hopefully you've understood that our ambition is really to make climate dividends one of the main indicators recognized and used internationally by both institutions and the market to really help measure and value climate solution and incentivize more investment towards them. And this is not just an ambition, we've already started. As I said, the Climate Dividends Association, which was co-founded by, and I actually didn't say it, so Ademe, Mirova, Sweep, Team for the Planet, 2015, and a foundation called Kanopée Partage in 2023, has already done quite a lot of work in less than 2 years, since we've got, by the end of the year, because some companies are currently issuing their climate dividends, but more than 100 investors will have received climate dividends from approximately 35 companies, we'll have probably much more than 1.5 climate dividends, but I didn't want to put figures that weren't released yet. And so the movement is on and growing, and the more investors that we have on board, the more portcos, the more portfolio companies we have on board, the more value come from climate dividend for all of us. And so this is really the idea of this whole initiative, to try to do it together to push towards the good decision. That was a little bit of an intense presentation. Hopefully it made sense. And now I'm very happy to give the floor to Erwann and Damien so that they can share with us their point of view and tell them if I'm just saying fake things. And so I'll put us in big mode. Hopefully you can all see us. So maybe Damien, if that's okay for you, would love if you can introduce yourself. Tell us, how did you discover the initiative and how did you get involved concretely into climate dividends?
Yeah, so thank you, Laura, for giving this comprehensive presentation of climate dividends. To give you a brief introduction of Daphni and what I do here. So I'm in charge of all the sustainability topics at Daphni. Daphni, the French early stage VC that invests from seed to Series A. We have almost a bit more than 500 million of AUM and 60 portfolio companies. We are investor in tech and sector agnostic. However, we have this quite huge angle on environmental solutions, hence why we're here today. We've discovered climate dividend in 2023 when the initiative was launched through one of our partners, Paul, to mention him. And we found out that it was really resonating with our beliefs and value. We wanted to find an initiative or a protocol or something that is more standardized to value the environmental impact of our portfolio company, especially the climate ones. And that's how we got involved the past 2 years. And more concretely, what we did, we introduced climate dividends toward our portfolio companies and to see if we could have some synergies and if it would fit the needs of our portfolio companies as well. We let them decide it, the portfolio companies. We were not like too pushy on this, and the fit went really well with Laura and the team, and also with the philosophy of climate dividends. And that's why we, despite encouraging all our portfolio companies, we had great success in it, and we had like 4 or 5 of them that were really interested, and a few of them joined the second cohort. Just to mention, Give that released its climate dividends few weeks ago. We have also 15 that soon to be releasing its climate dividend. However, to be fair, we were not the one making the introduction with 15, and they did it by themselves or through other investors they have. And we have also other portfolio companies in circular economy, such as Upcycle, that has joined and that is still in the process of looking into validating its climate emission modeling. And also Foam and Back Market that are actively looking into the initiative and see how they can work with the climate dividends on this side. And as Laura mentioned, there are like few working groups and few sessions with investors, and we've been quite active on the reflection level to see what ratio, what metrics like we could be useful to us. I mean, we are early stage, so we are not focusing on the same outcomes as like a growth stage investor, and that's a plurality of investors in the working groups are really interesting. And I let Erwann present himself and how he got involved.
Thanks, Damien. Thanks, Laura, for taking the opportunity to share what we are already doing all together. So yes, I'm Erwann Ligné, a partner at Eurazeo. We at the Eurazeo, we do manage 35 billion euro with the specificity that 10 billion out of the 35 as with our own balance sheet. So in a way, we are a listed company, but we act as a GP, but also as LP, because the balance sheet is seeding and supporting all of the different investment strategy within our group. Today, after more than 17 years on the small mid buyout space with a very strong focus on ESG, I'll come back to it. We've been launching, I'm co-heading this new buyout initiative internally called Eurazeo Planetary Boundaries Fund, which is a way to invest in SMEs that are for solutions to answer the needs of the planetary boundaries, a really robust scientific framework was born back in 2009. I'll come back to it a bit later. And climate, of course, is one of the 9 processes, one on the 9 limits that are now, overstepped, exceeded. We all suffer of climate change consequences. So really the strategy of this fund, buyout fund, is to invest in solutions with a clear focus, with an holistic approach on the planetary boundaries. And the way we have been always setting up our ESG strategy within our investment strategy back in 2008 already. So that was more, how to make sure we're all going the same direction and the same positive direction with the same methodology as much as possible, make us enter into contact with Climate Dividends more than 1.5 years ago with Audrey Lambry first, our impact manager for Planetary Boundaries Fund, who came to your launching events. She had the intuition that there was something probably good that could come out from this event, which has been confirmed since. So quite quick, we've been adopting the climate dividend methodology in some of the portfolio companies. We'll come back to it a bit later. And personally, I met Laura at the Convention des entreprises pour le climat, the CEC in French. And we were discussing together about how to value this initiative, the climate dividends, as it has been always a topic, how to value ESG more globally. So I think, Laura, it's fair to say that there have been a good match in how we could really make our industry progress in valuing, again, all the efforts we are all doing more and more by supporting our portfolio companies in delivering positive impact. So that was really I would say the first step of collaborating. So when Audrey Thibault was also with us today, and our ESG and impact team is working with portfolio companies specific on the technical aspect, I joined the financial working group you mentioned, Laura, to continue to progress how to value climate dividends, basically.
Super clear, and thanks a lot for your support since quite a long time now and for presenting it right now. The idea is to ask you a few questions to be able to share maybe more your approach on this. And the first one is quite easy, but I think it's important is, and we can do Damien and then Erwann just to keep on the logic. But for you, so what's the main value added that you see in climate dividends for you and for your portfolio companies?
Yeah, happy to start with. And I think it's related also to a question on the chat, which was since the metrics are self-reported, how can we ensure that they are following kind of the same protocol or verification process? So I will start with that. I think we've seen a lot of companies that are reporting avoided emission and so positive contribution to climate. And what we needed is kind of like a protocol to ensure that all the claims of those companies are kind of robust and we won't be and they won't be accused of greenwashing. So this third-party verification kind of united is really important, like for us and I think for the ecosystem. Another point to highlight is we need also kind of standardized metrics and some metric that have to be comparable, also like to measure the avoided emission, but also to report them and to value them. Having one common framework is paramount to do that. And moreover, like we are always talking about like financial dividends, and just in front of that, talking about just avoided emission, I think it's misleading because investors aren't able like to think about to put them on the same level. and they are so I think it's important to have a common language on that. Moreover, it's allowed us to talk to people that are not experts on climate, even internally or externally. It's easier like to just talk about like one KPI, one indicator that would resonate within the name. It's climate dividend, so they know that it's due to the shareholders. I think it's easier like to address all those issues. And we've been looking at how can we measure in like kinds of financial terms avoided emission, and we haven't found anything good prior climate dividend for avoided emission. So I think it was really a good step for us and something that we looked into quite deeply. So all those reasons are the reason that we are endorsing climate dividend, and we aim to make it like the international standards on avoided emissions.
Thanks, Damien.
But I won't really rate. No, I won't duplicate or repeat exactly what you said, Damien. We're fully on the same page. I think it's key for all of us to have a kind of standard that is a reference to make sure we can use this data on a robust manner. So again, when it's about methodologies on ESG, on environment notably, and specifically on climate, it's really key that you can use this data also as a benchmark, because not only as investor, but for our portfolio company, more and more in a request for proposal with big contractors they are working with, not only the financial aspect is part of the bid, the answer, but all these contractors are also asking, those companies to contribute, to report, and to give the data and climate, and notably on carbon. So putting our portfolio company in a position to having this audited or certified way of communicating their carbon footprint, avoided emission, will be definitely a competitive advantage going forward. It becomes more and more a criteria for, again, those big contractors in their value chain to select such supplier or another one. So it's just, again, to say what Damien said, it's making sure we have the same methodology that can be used instead of having each on our side our own methodology, but you cannot compare with the others in a way. This avoided emission calculation to be audited, to be certified before being publicly released. It's really key, and it's really business related. It's not just, again, a kind of extra financial greenwashing reporting. It has to be linked with the business, and with climate dividends, it is the case.
Super cool. And if I can just capitalize on what you both said, maybe especially Erwann, it was very interesting what we did with Eurazeo and with Thibaut de Planck, who's also here. Some people have specific questions on it, but we embarked two of your portfolio companies on the solar PV sector, which at first was a sector that we thought was easy. I mean, renewable energies was one of the easiest way to measure avoided emissions compared to circular economy or things like this. But we in Eurazeo had been measuring of their avoided emission and auditing them for a long time, but doing their own thing. And so we kind of gathered several people, companies like Voltalia, other CVE, other companies in the sector. And the first thing was like, okay, well, not everyone does the same thing. So everyone has something that is quite interesting, and no one was doing sort of greenwashing or bullshit, but it's just very different. And so it has a huge problem. How do you want this to be something shared that we use it? It's completely impossible. And so we did this work of sharing and coordinating and agreeing on one common methodology that we can then capitalize on it. And I think especially in sectors that are so key and that seem so obvious of the ecological transition, it's a super interesting step to have something that both the players of the sector and the investors can say, okay, at least we're talking all the same language. Otherwise, it's just impossible.
And I think talking the same language is also a question of credibility, because again, we've been mentioning greenwashing, as you said, Damien, as well. It's really clear that when we use data, we communicate on them, and again, benchmarking, credibility is key. So that's why this methodology, this protocol, is really the enabler to make it happen. And for sure that when we will support new sector, and the photovoltaic one is a really good example, you have to create things, but again, the trick is really to create new methodology, new model. At the end of the day, we will lose all the stakeholders. So credibility and consistency in the way we are going to work on this matter is really key again. So we have been facing that with all of the portfolio company. We have to find something that works from VC to large buyout, from, I would say, debt provider to equity provider, and from GP to LP. That's really what the aim is behind that. But please, Damien.
Yeah, and I just the word transparency as well. I think in the financial market and even private assets, investors or even retail ones are always like there is this gap sometimes in transparency, like from the actors, and having a public protocol like to address this. I think it's also making the industry more resilient on this matter.
Super cool. Maybe because I see the time, maybe very, very quickly, do you have any difficulties or challenge that you or your portfolio companies encountered that you think is interesting to share with the rest of the team? Whoever wants to start.
Well, I'll start really quickly. As we are VC investor early stage, it could be quite hard, like for innovative companies that are tackling a new issue, to calculate avoided emissions first, because like the sector can be quite really new and there is no comparable in the methodology. So the first thing, it's also like to create this new methodology on avoided emission, which can be quite hard, and it won't take few weeks. It would take like few months to realize it, and you need data. So if the company is too early and doesn't have the product yet, even if you have, if you found like the use case in climate, it doesn't mean that it will be available to calculate climate dividend first. So maybe needed to have like some commercial contracts and products. So then we have this great example with Upcycle, which is acting in the upcycling industry. They had to build their model. They had to increase their sales before like having more data, and it's quite hard for them. I mean, we know the use case. We know that they are avoiding a lot of emission because they are using wastes and they are putting them into the agro-food as entrance. However, as it's new, it's a bit harder like to calculate, I'd say.
And if super good point, and just tackling on this, because I saw there was a question very quickly on also project frame, and I think it's a good way to mention it, for especially for early stage, but even in any case, there's this question of how you're going to project and assess. And the idea is that you'll be able to do projection of climate dividend exactly the same as you do projections of financial returns that you're not very sure of it, but you're hoping. But then the climate dividend in itself is the realized impact. It's once you've done it, it's the proof of that. And so the idea is not to say that you have to do climate dividends when you're super early stage, but it's more to complement. And we're typically working a lot with this NGO called Prime Coalition, developing the project frame tool, which helps enable and assess this sort of planned impact. But you're never going to do for real planned impact if you're not checking the realized afterwards. Otherwise, it's completely useless. And it's a bit sad to do the realized impact if you're not using it as planned. So both things are kind of complementary. And I think, especially in VCs or early stage, but even for bigger companies, I think that's relevant.
If I may add, it's not only about VC when you can struggle, because you, as a financial sponsor, we come to our portfolio companies asking for something new with new methodologies. So it takes time, money for those companies. So it has been the same journey over the last 15 years on our side. It's not the size of the company. We are shareholder. We have a role to play. And if something good we can do for those companies to support this initiative, is also to support the seeding, the launching of that. And typically, we've been financing always over the last decade, always the first step, not on behalf of the portfolio company, but to make sure the portfolio company consider it, that it's really part of the strategy. It's not an additional cost to them, even if, of course, we count on them in terms of management and time. And then when they have the appropriate, very well, the methodology and the benefit for it, it is their place. So I would encourage everyone, to make the investment effort at beginning, because at the end of the day, it's really a strong win for those companies. So that's and it's not, again, a question of I am the majority shareholder, the minority one. We are the shareholder, we are part of the stakeholder, and we are here to support and accelerate this transition So that's the best way to do it, is to support the company also financially, at least at the beginning for launching it.
And that's a super good point on which something that we haven't shared is that I think, as a shareholder, you can be impactant. You can have an impact either by selecting companies that are already impact driven, and climate dividends can be one of the interesting criteria to use at that point, if it's possible, or the projections of climate dividend. But you also have a role to help companies transition and go from either very polluting or very neutral activities to have decarbonizing one, and helping them to value those by providing them this framework is also an interesting way of, helping maximizing their impact, which I think is extremely necessary, because we need climate tech startups, but we also need the normal bunch of old companies to transition. Because we took a little bit more time on this, maybe just very, very quickly, Erwann and then Damien, for you, what are the next steps for climate dividends and your involvement and what you see, what you want to do with climate dividends?
I think the next step is really about making sure all of our industry enter again the same direction, but the right one, by addressing this climate issue. So really is to make sure we make this climate dividends protocol and methodology really visible within our industry, and again from the GP to LP, but also with the portfolio company. So to making sure we are all adopting the same protocol, the same methodology, we will gain a lot of time. We have been struggling again on ESG to get this to be at this point. So now we have the opportunity to be very efficient in the way to address this climate issue thanks to the climate dividend. So typically, as a strong, I would say, stakeholder at our industry, but in France Invest in France, but also at Invest Europe, I think it's really about making sure between portfolio company, GP and LP, we talk with the same language, and we adopt this protocol to avoid again having to struggle for the 5 coming years, just to say, okay, how do we calculate avoided emission? So that will be making sure our entire value chain adopt the same method.
Great.
And on my side, like for I would have 3 points. The first one is to continue to embark our portfolio companies and the tech ecosystem. Like the more company would be there, I think it will be also easier to calculate and to compute avoided emission in the future, as some methodologies, they would be like quite similar, I'd say. The second one is to take it internationally. I think we can't only have the initiative in France. What we need is to have like an international view on it, and to embark like all the other funds and countries as well, even the US, and also maybe in Asia as well, like to make this standard really matter. And the last one, I think it's now time to embark our LPs, to educate them on what it could be like beneficial for them. I think they are a bit far now from this initiative, and they would benefit greatly to embark them as well, as they are investors in other funds, and they can have like this, we can map all the value chain here.
I think, Damien, a good way to do it and to embark everyone is to make sure everyone, and it comes back to one of your points, Laura, could benefit from the distribution of climate dividends. Because it's good for us as a GP to receive climate dividends from portfolio company, but we need to consider if we keep them for us, or if we distribute them to our LP, which is feasible. I mean, we have to be very conscious about not double counting, but we are many stakeholders supporting any portfolio company, again, debt provider, equity provider, but on top of us, there is also LP. So to who do we split, I would say, or do we share these climate dividends? That's a good topic for the coming months, I would say, for the future.
Yeah, definitely. And a very good point. And I think just one thing on the international aspect of the initiative that we already have embarked, but it not enough, 100% aligned, Damien, but several users that both from the investor's point of view or the company's point of view that are in Europe, in the US, and the technical committee that supports the scientific technical committee that looks over a protocol is very international. So we've got a lot of international people and organization. We've mentioned Frame, and people from Japan that Thibaut saw yesterday, that with whom we've discussed. But of course, the idea is to do it more, because since the beginning, the ambition has been to be internationally. I mean, financial dividends isn't a French nor an American concept. So same thing here. We could go on forever, but I know there's been quite a lot of questions, and some, I think, so some I know Thibaut has answered them right away. We're not going to be able to take all of them. If some weren't inserted sufficiently, we'll do a follow-up and by email. And of course, you can also reach out to us afterwards if you want to discuss it more. And I'm sure Damien and Erwann will be super happy to answer more questions I haven't asked, but I'll just... So maybe there's one, I think, Damien, and as I know you have to run very sharp on time, there's one that has been addressed to you more specifically, if you want to...
So it's, I mean, we do not we have only few companies that joined the climate dividend cohort now, so it's really hard to have the average. I think it's also hard for the methodology on avoided emission would depend on what provider you would use, and it's kind of the same as like an LCA price.
Yes.
To compute the avoided emission. So for those companies, we even ask them to compute priority number one the avoided emission instead of their carbon footprints if they have to do a trade-off in terms of costs, and it's more efficient because you do know if you do an LCA or a carbon emission avoided computation, it would be of great advantage. But as Thibaut mentioned, then you have the cost of the validation and the audits of the data. So it's dependent. As I mentioned, we would advise the company to start to think about how to compute the avoided emission as soon as they start selling, and then for the verification, we will still wait a bit to have a more commercial traction and to have a few units sold, and not just one or two, to have maybe a year of data or two of sales.
Erwann.
Clearly, we are in a process to make sure all of our strategy, again, from VC to infrastructure, and notably our energy transition infrastructure is really working on it, and to buy out. So that will be clearly a common methodology within our platform Eurazeo for all of the strategy. And I think what is really key is to make sure we are going, and 3 of them will publish their climate dividends. So Vestiaire Collective, just to mention one of the most known one in terms of brands, is going to release it, I guess, next week.
They did it already.
It's done this week. Yes, and but this is a good example of how a company is really adopting the methodology again for their business, and how do they communicate on that. So again, I think it's really it's not mature yet, but we're really on the right pace, I would say. And again, whatever the business model of the companies and whatever the maturity of the companies, it works. So you should see more and more, yes, communications and companies, portfolio companies.
Yeah, on this, so as Erwann said, there's different stages, and on the cost, I think some investors can pay for it as well. It depends exactly that we can pay for carbon footprint. That's also, everyone can decide what they want to do on this. And I think what Damien said is quite interesting, is that we've noticed that starting by avoided emission calculation can be much more insensitive than starting by the carbon footprint. But because the two are linked, if you want to maximize your avoided emission, you either sell your product to someone who's even more polluting, or you decarbonize what you do. And so it's really not contradictory with the optimization and potential reduction of your own carbon footprint.
Where I agree, I fully agree. You talk about the future, you project your action plan in the future. It's not just reporting, it's really projection. And that makes a huge difference, because the company is moving, is progressing on the business side. So it's very strong to accompany, I would say, this progress by also projecting the avoided emission going forward. I think it makes it.
And there's another question that was addressed, I think, on the distribution to climate dividends only to shareholders, because there's also debt that exists. So this is extremely true. Shadi, thank you for that question. So two very broad, and then I'll let Erwann, maybe, who wanted also to react. The idea of climate dividends being distributed only to shareholders is because it's dividends. So it really mimics what we've said. So you're a shareholder, you've got equity, and so you have the proof of what's been done through your equity. So in that sense, it really made sense for us for it to have only shareholders. However, we're very aligned on the impact that in some sectors, especially in infrastructure or in big projects, debt is extremely key for the financing of those projects and should be in some way valued, that's for sure. To be completely honest, we haven't fixed the way it should. Is it climate dividends? I'm not feeling extremely comfortable with it. Should be something else. How should it be done? Honestly, I don't really know yet. This is one of the big topics that we want to tackle. It will probably be addressed in the
working group.
Yeah, in the financial group,
working group.
And in the public consultation also that we will lead in Q4. So it's an open question, and if someone, I mean, as you see, this is also a very collaborative approach. If some of you have time, go for it.
I think it's a very relevant question, but I'm in the buyout space for close to 2 decades now, and we have seen over the very last years developing a new trend in the debt, which is a ESG linked loan, where really you put pricing on the debt and related to some ratio, specifically ERE ratio, to support the cost of debt. So there is a direct link in the ESG linked loan between the cost of debt and the environmental performance, notably. So I think it's a really relevant topic to be integrated for sure in our working group, how to value them. And at the end of the day, we need to be very cautious that the avoided emission by a portfolio company is not double counted between debt, equity, LP, and GP. So in terms of methodology, definitely something we need to work on to make sure that everyone can use these climate dividends in a way that can use this data, this value, without double counting them.
100% aligned. Thank you so much, Damien, who had to run really, really on time, so he has to leave us. Thanks so much, Damien, and cool that you said feel free to reach out. Maybe we can take one last question. I don't know if Thibaut, because you have one that is you suggest us to take. I'm just looking at those that haven't been answered. Maybe not one question, but I see several. Just to give you something that be useful on how you can engage if you feel like it is, so there will be a public consultation on the protocol, so much more in the sort of carbon impact assessment, distribution role, verification, etc. This will be launched in October. It would be extremely interesting to have also financial people response on it, so don't hesitate to do so. We'll communicate on it. That would be something very interesting to do so. Then there's this financial working group where the more people we have on it, the more we already set the rules that we want to accept. So don't hesitate if you feel like either being extremely committed like Erwann or being what we call project advisor that comes to review. That's also possible. And of course,
yes, if you allow me, sorry to interrupt. Happy to share concrete business case, because I know that when we talk about ESG again, environment, it's okay. The concept is good, but it's even better and even more efficient when we can be very concrete. So honestly, to all who connected today and even going forward, happy to, on a one-to-one basis, happy to share what we have done in portfolio companies, again, just to put concrete things, concrete matter on the concept. So please do not hesitate to reach out to Laura, and we can arrange things.
That's so nice. Thank you, Erwann. And you have at least not the financial part, but all the registry is public. So you already have a lot of things that you can see, Vestiaire Collective that Erwann mentioned, and all the portfolio companies.
We have an infra, and photovoltaic you mentioned, at TSC. We have we have already concrete material to share.
And the last thing that I want all to leave you is that as an investor, you've got a huge role to help us spread this, is to adopt it and to embark as many portfolio companies as you can. So for 2025, 2024 is going to be too short. But so if you've got any companies that you know they've already measured, that you've already been this and willing to go into this sort of global approach, don't hesitate to reach out to us, and we'll be super happy to collaborate. Thank you so much, Erwann. Thank you, Damien, who left, but it was extremely interesting as well.
Thank you, Laura, and the team for your support and your initiative.
and thanks to all that connected. We'll share the replay for those who weren't able to attend, and looking forward to keep moving forward and hopefully changing a little bit more the value paradigm for finance. Thanks a lot, everyone, and have a good meal. Bye-bye.